Thank you for your great report. Let's bring in our market experts. We welcome our trillion-dollar man, Robert Dole, Vice Chair and Global CIO of Equities at BlackRock. Also with us, Art Hogan, Managing Director at Jefferies, and Peter Schiff of Euro Pacific Capital and author of the little book of Bull Moves in Bear Markets. Bob Dole, I want to put a chart up. I love charts about market prices, which I think are smarter than economic models. We have a chart of gold and copper. Let's put it up there. In the blue, gold is coming down. In the yellow, copper is going up. Dr. Copper is signaling economic recovery, Bob Dole. On the other hand, Dr. Inflation, which is gold, is signaling lower inflation. I think this is totally bullish, but I want to get your take.
Totally agree. Good signs. The copper, I think, is a reflection of the fact that emerging markets have all in the bottoming process, signs of life here and there. China, prototypical example. And I think it's also suggesting that the big black hole people feared in the developed world does have a bottom, and eventually we'll have a recovery here as well.
And what about all this earnings stuff? I mean, look, it seems to me first quarter earnings are already anticipated and discounted into the stock market. There may be other announcements of government policy or economic statistics, but what about the better February and early March economic numbers outside of jobs? And what about the earnings point?
Earnings, as you know, are at best coincident indicator. They are already factored in by the market. My guess is some of the bears for the full year in 2009 have gone too far in cutting estimates. As you point out, 2 months in a row, retail sales better than expected. Last week, consumer confidence improving. Several home statistics like first-time home buyers showing signs of life. Look, we've got a tough economy, no getting around it, but it's no longer all bad news. We're getting a lot of less bad news and maybe eventually some good news.
All right, Peter Schiff, Dr. Gold, a.k.a. Dr. Inflation, is saying don't fret so much about inflation. I know you do.
Well, I think you're reading it wrong. I think what's happening is certainly investors are getting a little bit more optimistic on growth. So they're selling some of their defensive plays like gold, and they're buying copper. They're buying more stocks. But the reason everybody's getting optimistic on growth is because they think the government might have success at creating growth by creating inflation. I don't know about the growth, but we're definitely going to get the inflation, and that is very bullish for gold.
Well, what's the signal for inflation? I mean, I've always used gold. I could use the Treasury tip inflation spreads, but they're not really going anywhere. They're less than 150 basis points. What is the signal, Peter?
The signal for inflation is inflation. All the economic stimulus is inflation. All the bailouts are inflation. Everything is being funded by central banks printing money. That is inflation. And you don't get economic growth by printing money. You know, what gives you economic growth, what creates purchasing power is production. If you simply print money, you don't create purchasing power, you just make prices go up. And that's all that's going to happen.
Hey, Art Hogan, you had to print some money. We had credit deflation, housing deflation. We actually had monetary deflation because the Fed didn't print any money for about 18 months. I mean, go ahead, take a whack at this one.
No, I think you're absolutely correct. I think the point we're missing here is we need a modicum of inflation here. We're in an economy. We certainly do, Peter. And the point that you're missing is if you look at every recovery we've seen and every turnaround from whether it's recession or economic slowdown, the first thing that turns things around is a modicum of inflation.
Well, that's why we're in trouble. Remember, we had all these stimuluses during the Greenspan era. We're suffering that stimulus hangover right now. You know, if you have bad loans, you simply can't sweep them away by printing money and saying, well, since we lost money, we're just going to print up some more and it's all going to be okay.
Art,
it doesn't work that way.
Is your point, though, a whiff of inflation is better than severe deflation, or where are you going with this?
That's exactly correct. The point that Peter doesn't come to is what we don't need is a deflationary or stagflationary economy. We need to see a modicum of inflation to grow our way out of this. We talked about banks growing their way out of this. We're going to see all industry growing their way out of this. And to do that, you need growth in the economy. Part of that growth is embedded in a sustainable inflation rate and a sustainable growth rate.
But the only thing that's going to give us real growth is if we stop spending money, if we save money, if we invest in productive capacity and produce more. We're not going to get any of that by simply printing more money. We're going to get an inflationary depression is what we're going to get.
One message. It's kind of a one message. I mean, Robert Dole,
it's the right message, though.
On the way out, Bob Dole, I mean, one of the other things that I like is the rise in the emerging market stocks. I think that's a good signal for commodity revival, the end of deflation, and the potential, if I include China, which has done a great job performing, Bob Dole, this is a signal maybe the world economy is bottoming, maybe recovery is coming sooner. I mean, I got to tell you, I think we're going to have much easier GDP in the first quarter than people think, consumer spending up. I think we could have positive GDP by the summer, Bob.
We need some nominal growth in this world, and that comes from some real growth and a modicum of inflation, to use the word. As long as we keep it contained, that will help people pay their bills. It will help profitability. It will restore confidence. I think we've turned the corner.
What's a little bit inflation, just to get Peter Schiff's collar up again?
Like being
What's
a little bit
inflation?
pregnant. That's what it's like.
It's like, okay, give me a number. 1%? I mean, we're at zero right now.
It means not negative, not zero. You know, a couple of percent's not all bad.
You agree with that, Art?
2 to 2.5%.
You can live with 2 to 2.5. You know, Peter Schiff, in the last, the great bull market spanning the 80s and the 90s, the inflation rate, I don't know, was somewhere around 2.5%.
Yeah, and
it was a pretty good deal.
Yeah, but
before the Fed started stop, go, stop, go, stop,
yeah,
go.
but that doesn't mean it was inflation that was creating growth. If we had a freer economy, we'd have falling prices.
I
if we
agree
had
with
sound
that.
money.
No, inflation doesn't create growth. I'm just saying.
And a growing economy lowers prices.
But let's assume we have some modicum, to use that word again, of free market economics. Now, we can debate that in the next segment. Art is saying 2% inflation is something we can live with. What do you think? Peter?
No, if you compound that over years, it destroys the value of money.
Right.
I don't want any inflation. I want money to gain value.
All right. I want money to gain value, too. Growth, that's what I want. Free market economics, that's what I want. Cut tax rates, that's what I want. Lots more ahead. How now, Dow Jones? We'll be right back. You're watching. Very much. Now we're back with Robert Dole, Art Hogan, and Peter Schiff. Art, it's interesting, Hampton's report. First of all, I trust Secretary Gates. He's worked for Republicans and Democrats. I think he's a man of great judgment, strong national security for this country. Now, his restructuring today led to a big, almost 4% gain in defense stocks. Northrop Grumman up 9%, Lockheed Martin 9%, Raytheon 8%, General Dynamics 7%. What do you make of it, Art?
Two things. I think the important thing is we've actually got a Defense Department that's planning their budget around the next war, not the last war. We're making some very prudent choices in cutting programs that we don't need anymore. That's not something we historically have done very well. The second thing is the stocks reacted the way they should because there were no major surprises of the cuts or of the transitions. Everything was pretty well telegraphed and expected. You know, for a communique that wasn't leaked and wasn't out there, the market had got it pretty right, and I think that's why they bought the stocks today. I think they'll continue to do so because there wasn't any major cuts that we weren't planning on, and they all make a good deal of sense. And I think there's some buzz around some consolidation in the space, too. There's a lot of people looking at Textron as a possible takeover candidate. I think that's also very positive.
Textron, consolidation. Robert Dole, what do you think about that? Not necessarily Textron alone, but as a general theme for the stock market, with easy money and low interest rates and some kind of economic recovery, are you looking for mergers, acquisitions, consolidations, and so forth?
Yes, yes, and yes, Larry. I think as corporate CEOs look at the top line in a slow growth world, they will struggle to grow, and therefore they'll look at the company down the street. Can we get together and have a stronger growth rate? We've seen it in pharmaceuticals already. My guess we'll see more in healthcare, more in technology. We'll see it in the energy space. I think as the dust settles and confidence continues to rise, we'll have a lot more M&A.
If you see that kind of action, is it just generally bullish?
It has to be. I would think it's an incremental buyer of common stocks that wasn't there yesterday.
And I'm going to assume, I want to ask you this, would this sort of consolidation, which will require some mergers and acquisitions, will it be leveraged heavily or not? I mean, that's a leading question, but I ask it because I'm hearing some people say, oh, no, gosh, don't go in more borrowing to buy this stuff. What's your take on the leverage aspect? Or might they buy it for cash and stock alone?
I think it'll mostly be cash and stock. I think leverage is a four-letter word for the time being. You will get the mergers for strategic purposes with industry as opposed to financial buyers.
Peter Schiff, would you buy defense stocks right now?
Look, you know, I'm not a big buyer of defense stocks, and I certainly don't think that spending more money on defense in this country is something that's going to help the economy. You know, spending money on defense diverts resources that we need for civilian purposes. I'd much rather see investment in consumer manufacturing than making more weapons.
Of course, Peter, if we don't have an adequate national defense, some people may deny this in Washington these days in the White House, but there are still terrorists out there that want to nail us.
I'm not
saying
we don't
have national defense. It's going to be hard to maintain a strong domestic economy.
I'm not saying we don't need to spend national defense. I'm just saying that spending more money on defense is not going to help the economy. It's something that maybe we have to do. It might be something that's unfortunate that we have to do, but we're not going to get rich spending money on defense. There's other things that we really need resources for. To the extent that we have to utilize those resources for national defense is a drain on the economy.
Art Hogan, who's right and who's wrong? Mike Mayo, distinguished bank analyst, out this morning with a report. Our Charlie Gasparino got it to everybody here at CNBC. He says stay away from banks. They haven't made the markdowns except 2%, 98% not marked down. Looks bad. On the other hand, Meredith Whitney, another distinguished bank analyst, was on the network this afternoon. I think it was Maria. She said don't short the bank stocks. I had Frank Sorrentino, a real-life community banker from New Jersey, who I might say is not TARP. He said banks are making money because you can borrow at 0 and loan at 5 or 6%. So who's right and who's wrong? Mayo, Whitney, who?
Well, I would tell you, and I think your last guest brought up a very good point. If you're a bank that doesn't have bad assets in your balance sheet, it's a great environment to make money. And we've heard from several banks that have told us the first quarter is going to look pretty good. They are actually borrowing at very low cost and they're lending at very high cost. The difference in the two stories is who can actually get these toxic assets in the right place and marked to the right level. And I think we're getting great work done on both of those fronts. If I had to lean in one direction, I'm going to lean in Meredith Whitney's direction.
Would you be buying banks and or financials right now?
No. It's a very difficult time to be buying them. It's a trade. It's not something you're going to own. It's going to be a long time before they completely repair themselves, but as a trade into the quarter, yeah, I'd buy them.
Bob Dole, does the bank and financial story have any clarity yet?
No, I think there are a lot of unknowns. The income statements are getting better. As everybody's pointed out, the balance sheet's still the issue. We don't understand all those assets. Will take time to get them right. More capital is going to be needed some places without question.
Some of the early reporting earnings are going to be big banks. If I'm not mistaken, Citigroup and Bank of America may surprise on the upside. Go ahead.
Yes, the income statements will look generally okay. It's the write-downs that come along with the bad assets.
Peter, I take it you disagree.
No, don't be fooled by the earnings and don't go into business with the government. It's not going to work out. And, you know, interest rates are low now. They're going to go up. They're going to go a lot higher, and it's going to crush the bank earnings that are solvent now. Just stay away from this entire sector. There are much better places to invest.
I think you're right about don't go into business with the government. That part I like. Peter, what's your favorite investment real quick?
Well, I like foreign stocks. I mean, they're trading really well, and I still like gold. This is a great dip to buy gold because it is inflation that's driving this growth story, and people will buy gold.
All right, thank you. We're going to leave it there. Robert Dole, Art Hogan, Peter Schiff. Very interesting gentleman coming up. Tim Geithner, he's cracking down on mortgage rescue scams.